mainly gold. So you will see the price of gold that we are talking about, or the amount of gold that we are talking about, is not the amount of gold as in real gold, but it includes other precious metals. Okay, so the price of the quantity of precious metals is converted at a particular rate and short to the amount of gold, to the equivalent amount of gold that should add to the amount of physical gold that exists at the central bank. So that's number one, that is going to stabilize this currency. Then number two, we've got foreign currency reserves. Where are these going to come from? Mainly from the exports, the 25% export surrender requirement, and also sale proceeds of in-kind precious metals royalties. I'm sure there's now a requirement, there's now a possibility that you can pay 50% royalties in fiscal form of minerals, which means the central bank can actually sell those minerals to transfer to what? The foreign currency. What is the status of anchor currency as at 5 April 2024? So where I'm trying to drive to is to just check on the amount of import cover that we have to sustain our local currency. So as at 5 April 2024, we had $100 million declared in cash by the central bank, 2.522 kgs of gold, which consists of vault gold plus other mineral equivalent. Then that amount to 185 million of gold to make the entire local currency component of reserve money, which currently stands at 2.6 trillion equivalent to about 90 million. Okay, so the 185 million USD is supposed to make the amount of ZWL currency in the market to the tune of 90 million. That's what it means. Then the gold and cash reserve holding currently with the bank represents more than 3 times cover for the local currency being issued. So the calculation is simple: $100 is 185 is 285. That's 285 divided by 90. That's 3 times. So that's where the government was coming from. Then an important element of currency is what we call import cover. What we mean by import cover? Import cover refers to the number of months of imports that should be covered, that could be covered by a country's international reserves. Okay? So import cover is the number of months that should be covered by the country's. How many months should our reserves last if we were to import goods and services that we often import? So that's what we call import cover. It is an indicator of stability of the currency. Okay? So the SADC macroeconomic convergence criteria recommends an import cover of at least 3 months, which means our international reserves, which we have been appraised about, should enable us to at least cover 3 months of our imports. So total reserves for Zimbabwe amounts to 585 million. We are trying to be very exact, if I may use that term, because there is also some amount equal to 300 million that was declared by the Zimbabwe Treasury, that they have got that amount of reserves. So I'm sure they were not lying, isn't it? So this gives a total reserves of 285 plus 300, that's 585. That's 585 US dollars in terms of reserves as at what? 5 April. So in March 2024, Zimbabwe's import cover was reported at 744.5 million. I just want to give a rough estimate of our import cover, isn't it? So this gives an estimate of the import cover of 744.5 over 585, 1.27, which means our total reserves currently can last us 1.27 months. So we are far way below the 3 months import cover that should characterize a health or a stable currency. Okay, it's important to talk about that. Then let me move on to the implications of the new measures. I will begin by the success factors. You can see that some of them we have already covered them, but I'll just have a run through so that we clearly understand what this new monetary policy entails. The first success factor of a policy is measured around its basic functions. The first success factor of a currency is measured around its basic functions. So we've got 3 basic functions of money. Money should be used as a medium of exchange, which means you can use money to exchange for goods and services, so that you solve the problem of barter trade, where you really need to ensure double coincidence of lines. So that's number 1. Then number 2, money should be used as a unit of account, should perform the unit of the account function, which means it should provide a common measure of value for commodities to allow comparing values. So to do this, money should be divisible, fungible or exchangeable, countable or measurable. So this does not require a rocket scientist to establish whether money is performing its functions. If you are able to exchange your money for goods and services, so far so good. If it's able to serve as a unit of accounts, you can actually compare different commodities using the value of money that, or the value of currency. Then it's actually useful as a unit of account. Money should also be used as a store of value, which means with using currency, you should be able to store value without worrying about exchange rate movement, which are so much to the extent of depreciating your what or reducing your purchasing power. Okay, so if money can, if it serve as a, if it can hold value over time, then it qualifies as a success currency. The ZiG currency also needs commitment of the Reserve Bank of Zimbabwe. Whatever they've promised, they need to be, we need to follow up on that and make them accountable for what they have already announced. Which means, number 1, we need enough forex reserves to stabilize the currency. Number 2, we need what we call central bank independence. Do we have a soft nose versus a hard nose governor? A soft nose governor is not worried much about inflation. They can actually print money as and when he likes. But a hard nose governor, which we expect our new governor to be, is a governor who naturally dislikes inflation. So if we got that governor on the seat, then we will be able to go. Then how do we ensure central bank independence? I'm sure there are some reforms that we can also be proposed to strengthen the new currency. We can also have the central bank be guided by the Reserve Bank Act on all its operations, not going beyond what the Act describes, which means the important role of the Monetary Policy Committee has to be fully observed for the currency to be effectively serving its purpose. Then we also need convenient access. The other success issue is the convenience that it brings in terms of access to hard currency for the transacting public, especially the unbanked society. Let's all agree that we have got a large proportion of our society which is unbanked, which should rely on what? On the hard currency. Okay? So if we are having a situation where we've got 0.05% currency in circulation. That's not a healthy situation for our unbanked society. I'm sure the new government is going to do something about this. Then independent auditing for precious minerals, foreign currency and foreign currency reserves. We need to constantly audit. I'm sure I was reading some article from the central bank where they have promised to have an annual audit of all precious minerals and foreign currency in the central bank using an independent auditor. Okay, so that is quite commendable and welcome, but the background that we are having when we provide this kind of recommendation is that we remember we are working from history, isn't it? Remember the bond notes and coins were backed by the African Bank facility of 200 million, but still continuously lost value along the way. We don't know what happened to that buffer stock which was backing the currency. So we don't want to repeat the same mistake of yesteryear or of yesterday. So we expect the new government to work expeditiously to allow for this important requirement. Then keeping growth of money supply with growth of economic activity in the real sector stabilizes the general price level. The movement of the currency or the price changes that we see on the market are actually a reflection of the level of production that exists in the economy. Because I don't want to assume that this new currency that we are using is not fiat currency. Yes, it's backed by the precious metals, but still it's a fiat currency in the sense that it's a currency that can operate as long as production exists. As long as there is an increase in production, we expect also to have no problems in the central bank also increasing money supply in that respect. But a challenge comes when the central bank then increases money supply without looking at the real sector, which is the production side. Okay? So production remains a strategic angle of our currency going forward. Then positive savings and lending rates have been missing in the market. So this encourages medium to long-term savings. It's actually a success story that we are going to get from this new currency. Then statutory reserve requirements maintained at 15% and 5% for SIG and savings and time deposits respectively to maintain adequate liquidity in the banking sector. Okay. Then statutory reserve ratio for foreign currency demand deposits increased from 15% to 20% effective 8 April to maintain foreign liquidity, although with an opportunity cost for the banking sector. So an increase in the statutory reserve requirement to the bank is actually it's actually reducing the amount available for government lending. Okay, let me try to rush through, and someone is flagging the time, but I'm almost there. Then removal of bank charges to accounts with consistent, not more than, with accounts consistently not more than $100 per to SIG, and already talked about this. Substantially comes as a relief to low income depositors, positive response in creating automation for financial inclusion for people with disabilities. Then the risk factors that we expect to get from this new currency, we are going to continue to, we are going to expect some trust issues, trust of currency by economic agents, key to its success. But however, we need to encourage our citizens to also like their own currency, to work together with the central bank to allow the currency to work effectively. It has to be a collective responsibility. Then foreign debt obligations to continue weighing down efforts to stabilize the financial sector. Then the political risk, possibility of influence from the government to print money in cases of, normally when the government instructing the central bank to print money is not always bad, but in some cases it will be good for us. For example, if you have some shops, for example, to do with without supply chain distortions due to the geopolitical shock distortions, it's actually there might be need for printing money, but it's only going to be a challenge when money is printed to achieve or to get a political certificate. That's when it becomes a problem. Exchange rate pressures in the price discovery period. We have a new price exchange rate. We have a new price of the ZiG to the US dollar that we are going to start off with, but continuously the price, the actual price is going to be discovered through the market. We are happy now that it's a market determined exchange rate. Then there's also going to be some US dollar appetite that people are continuing to have, which is the instances from the past. Okay, people will continue to like the US dollar or to prefer the US dollar to any other currency that will come along their way. Then low demand for local currency in the absence of government commitment to encourage payments in local currency. We need to encourage the government to also make a commitment to like the local currency. I'm sure we all know what it means, especially when we go to issues to do with passports, fuel, and other services that the government provides. Those have to be paid in what? In the ZiG currency. That builds confidence also in the market to like the currency. Then the reserve building is a production issue. Without production, we are not going to expect no reserves. Remember, our reserves are going to come from gold. We need to produce gold. And we also need reserves to come from exports. We need to promote production. We need to promote the manufacturing sector. Inadequate supply of currency in circulation, currently 0.5%, I've talked about this. And then delay in issuing currency causes inconvenience to traders and commuters. Now the currency was announced 5 days ago, it's not yet in the market. You can see the panic that is in the market with respect to currency. Citizens will need time to learn also the new currency, so it's going to be also more time that is going to be needed to learn the new currency. I'm sure I am moving to the last slide. It is stuck. Okay, I'm moving to the last slide where I'm trying to provide some recommendations or some possible takeaway points that we need to observe going forward. So the first thing that we need to highlight is the need to have wider consultations when it comes to policy issues like the current policy where you are introducing a new currency. There is need for wider consultation. I'm not so sure about the extent to which the central bank is consulted the public on this, but to me, I think it's an issue that citizens will be worried about, to say what is the extent to which the central bank is actually consulted them before they implemented or they introduced a new currency. Also, there is need to educate citizens in new currency introduced well in time before it starts to circulate. But this time around, we see a situation where the currency, the education is going to come well after the introduction of the currency. We need also to ensure a healthy import cover, build our import reserves, so build our local currency, so our reserve currency, so that we have got at least 3 months import cover. We also need some transparency in auditing reserve auditing the reserves that make the ZiG currency. This can be done by an independent audit institution to get trust. Also, we need government to include payments for other goods and services provided or regulated by the government in local currency, e.g. passports, fuels, and rent talked about this. We also need some deliberate policy on production for export policies. Export incentives can come in as an example there. Reduce cost of doing business, need the one-stop shop, one-stop investment shops. We also need to promote local content purchases with government taking the lead. For example, local procurement, zero tolerance to corruption, particularly in the area of money laundering and precious minerals smuggling. So those are the key recommendations that I felt I can offer given this new monetary policy statement. Thank you very much for your time. This takes me to the end of my presentation.
Thank you, Dr. Zvengwa, for actually unpacking the 2024 monetary policy statement for us, highlighting the background, what really pushed authorities to actually introduce a new currency termed ZiG by dumping the Zimbabwean dollar, ZWL. And you managed to present before us some success factors, what must be followed if ZiG is to durably stabilize, and then also what are some of the risks which we can encounter as we move and transact with the ZiG, and also the recommendations. You've provided some recommendations authorities must actually implement so that we stabilize our local currency. So before we move into a plenary, I'll start with a panel discussion with experts here who actually discuss the monetary policy statement guided by the presentation which was presented by Dr. Zvengwa. And after the plenary, then we will have, after the panel discussion, then we will have the plenary where we accommodate all questions from the viewers on our platforms. So without not wasting much of your time, I will hand over to the panelists. Maybe to introduce the panelists, we have a facilitator for this session who will moderate or facilitate the panel discussion. So I hand over to the facilitator, Mr. Honest. Over to you.
Thank you, Shiko. Thank you, colleagues, for the meeting and for the discussion. Thank you, Dr. Zvengwa, for the presentation. I think you did well to unpack the spirit and the letter of the monetary policy. We now want to move on to hear the perspectives from the different stakeholders who are in here. So within the panel, I'm joined by Desi Gwanyanya, who is part of the monetary policy committee and who to an extent owns the monetary policy, was involved in this crafting. So he's going to help us unpack the reason why we have the monetary policy, and to sort of like give us the confidence that we need in appreciating the new currency. I'm also joined in by Nyachega Tatenda from the CEO Africa Roundtable, representing business. The business sector is sometimes refusing the currency that we own as a nation. And I think it was instrumental in also like in bearing the bond note. So we also want to hear the perspective of the business sector. We are also joined virtually by Dr. Chitambara, who we think is going to represent us as the consumers, the ordinary citizens, to also look at the perspective of the ordinary citizens, the perspective of the workers, the perspective of the consumers on the monetary policy statement. So the way we are going to do the panel, I will start with Desi Gwanyanya. My main question to you is, why should we accept the new currency? And what confidence do we have that this monetary policy is different from the previous monetary policies that have failed or that we have all agreed have not performed up to expectation, where should our confidence in the new monetary policy come from? So it's over to you.
Thank you, Mr. Moderator. Maybe if I can start by seeking of permission to present here, and so that when I present and the presentation is finished, I will be able to go for another engagement.
Okay, that's fine. But I hope in your presentation, you'll be able to give us the confidence that you really want.
Yes. So why should we accept? Why should we believe in the new currency? The ZiG is an improvement from all previous Zimbabwe dollar currencies. It is an improvement because it is backed by physical, real foreign assets. This backing gives ZiG a key attribute of convertibility. Thanks to the high levels of dollarization and this small amount of Zimbabwe dollar in the economy, we are able to fully cover or anchor the ZiG currency. It needed only 90 million to be able to cover the available ZiG in the economy. Now, this has made it possible for anyone, given the reserves that the central bank is holding, that is 100 million in cash and 185 million in precious minerals. It is possible for anyone to walk into a bank with a bona fide foreign invoice and get that invoice paid. Why? Because the total available reserve money component, the ZiG dollar component of the ZiG reserve money is only 90 million. And we have that money not sitting with a facility somewhere. No, we've got that money sitting at Reserve Bank. So Reserve Bank has already conscientized all treasurers of all banks to say, when you have an invoice that needs to be paid, please pick up your phone or give us in advance at least, so we anticipate the demand for foreign currency, just like any other normal economy. So this should give you hope. It gives you hope because this, I'm hearing, I don't know where the confusion is coming from. Maybe it needed me to really explain this. Because given the amount of ZiG in the economy, there's no need for anyone to reject it for purchase of anything, because you are able to convert that easily for US dollar for import requirements. Specifically, a service station that is selling fuel, if it accepts, and we know that despite that industry being a $1 billion industry anyway, even if we say accept the amount of money that is available in the economy, is only able to purchase a fraction of the fuel in the economy, 90 million against $1 billion fuel industry. So the question about whether you can buy fuel or anything, it doesn't arise given the monetary balance in the economy, because it's only a small fraction, which we want to then increase as the reserves are increasing in the economy. So we are saying, because it's only a small amount of money in the economy,
But when Treasury now is now looking for its taxes in ZIG, starting with QPGs, that is corporate tax, you recommended that Treasury should increase the demand for the ZIG. Yes, Treasury is prepared to do that, but for now, it is not advisable. Why? Because they can crash the market. The total amount of ZIG of QPGs, that is income tax, that they're expecting to collect is $150 million, but there's only 90 million. So imagine if they've gone 100%, we were going to be needing $300 million. It was going to crash the market. So we need that, we have that in mind. To say, no, you can't go full throttle. Because you also don't want to get the impression you are now made to print. Because remember, we still have a cover, 3.5 times cover. We wanted that to go smoothly. So we expect by June the markets to come to reserve bank or through their banks. It has to be done properly. You can't just go direct to reserve bank. The reserve bank is not a bank of me and you. You go to your bank, and when the bank fails to settle, they come to reserve bank. Then the reserve bank will then give you a ZIG. But when you give you the ZIG, it's an exchange. You're exchanging ZIG for foreign currency. The foreign currency will increase the reserve. Then we are able to increase the ZIG. That's how we are then going to reverse the dollarization levels in the economy. So it's a starting point. But you can see that the monetary policy is crafted properly in such a way that the reversal of dollarization is going to be addressed. The issue about the acceptability of ZIG is going to be addressed. The demand for ZIG and therefore its strength is going to be addressed. But you may want to agree with me that it needs time to achieve or to get where we want to go.
Okay, thank you, Percy. One of the issues that Dr. Sivengwa raised, especially on the lists that are around the currency, is the issue of confidence. Where lack of confidence by the citizens may actually result in the failure of the monetary policy and of the ZIG. What are you doing as RBZ and as the committee to instill that confidence? If you look at what people are saying in the streets, ordinary citizens, some of them are saying, as long as the ZIG cannot pay for the passport, I am not going to have confidence in the currency. Why? Because when the passports were exclusively priced in US dollars, it was because the government was saying, well, it was an indication that US dollar is somehow more superior to the local currency. So what are you going to do to instill that confidence within the citizens?
Let me emphasize, we are in a multiple currency system. But in the previous regime, currency regime, like you've indicated, the suppliers of service were insisting in US dollars. But because of the functionality of the US dollar against the Zimbabwean dollar, now the Zimbabwean dollar is functional, can perform the functions of money that Dr. Explained to us.
Mm-hmm.
There's no reason, there's no logic, because money is not demanded for its own sake. It's demanded for what it does. There is no logic in not wanting the ZIG, because it is performing what you are expecting it to do. So, because of that, you also don't want to force the passport office to exclusively accept ZIG. Why? Because the passport industry can, on its own, can consume the close to all the zinc that is available in the economy. So what will others use in the economy? So you also don't want,
Okay.
you also don't want the fuel industry. You also don't want to go to force them. Because where will the billion come from to fund this $1 billion industry? It's a start. You need to be logical in this start. Yes. So emotions, guys. Yes, I don't know how to revive the confidence. The governor yesterday gave repeated what the president said when he visited the Reserve Bank. To say, I don't know how Jesus would explain to the people that I am Jesus. Others believed, others did not. But he remained Jesus. I don't know how, how the sick can be explained. But the others will believe, others will not. But the success will vindicate Zig.
Okay.
Success will breed its success. Let's see how it functions. Those that doubt it will then be forced to see its efficacy as it starts to operate. But I personally believe in it. I also personally believe in the commitment, at least coming from there, of the policymaker, the Monetary Policy Committee, and the governor being part of the Monetary Policy Committee. I believe in his commitment to make this thing work. So what I can only do is to encourage, because Doc has also has indicated that, yes, the governor, we want him to lead, but he also depends on our support for the Zig currency. So I also implore you to educate the church community about why it is important to embrace your own currency. In any case, even when you are emotional about it, the emotions have to be sponsored. Okay. The central bank chief is saying, I will not sponsor emotions. So I don't know how the end will be. Oh. But I see a bright future for the country. I see renewed hope for the country. I see a new chapter for the country.
Thank you, Percy. It's unfortunate maybe that we'll be putting on the spotlight since you also said you want to leave before the end of the discussion. So I would also try to invite reflections from the people who are participating. And technical team, I see a comment or a question directed to Percy. If you can just scroll up so that maybe we'll also deal with it. But while we do that, perhaps we could hear also from the business sector. How are you seeing the new monetary policy? Are there opportunities for the business sector? And what are the challenges? Maybe before you come, Nyacheka, let's just look at what one of our participants has asked. Rev Bots, I'm sure his clergy is a pastor, and he thinks that this is a false start. He said this is a false start, Comrade Percy. We have only 1.7 months import balance. I think it's import cover, and we have a drought that requires 2 billion as per the disaster declaration. How do you intend to finance that?
Okay, let me answer that. The question of import cover doesn't arise in a dollarized economy or a nearly dollarized economy, almost dollarized economy. That's why in 2009 and 2013, we were not talking about import cover. I want to go to China next week. I don't even need to know about import cover because I've got the dollars in my pockets. Okay. So the import cover is to take care of the need of the US dollar in exchange for your own currency. So because I don't have my own currency, I got the US dollar, I don't need the import cover. So it doesn't arise. In any case, banks are holding 2.5 billion in their accounts, as I'm talking to you right now, of US dollars. In any case, we only have a fraction of Zimbabwe dollars in the economy to cover. So the import cover, in my view,
It's in our.
is in our pocket.
Okay, yeah, that's interesting. That's interesting. We don't need to deal somewhere because when I am going to import as an individual, I already have the money
So
in my bank
why do you
account.
want to assume that you want to be covered when you are covered?
Okay,
Why do you want to complain for nothing?
okay, yeah.
Yes.
Yeah, it's somewhere they say there are no emotions. Guy go take a few. Yeah, and I
He buys fuel. But how do you expect 90 million to buy 1 billion?
yeah, I get what you're saying. To say if we are going to open up for the fuels industry to accept.
We crash the market.
Will crash the market because all the zinc will go to buy fuel and you have no other zinc to use for the other.
How do you want to crash the market?
Perhaps we see how it goes, but now I really want to go to Mr. Nyacheka. How is the business receiving the monetary policy statement and what are the opportunities and challenges for business sector?
Thank you, Mr. Namat. Maybe to begin with, when you introduced, you talked about the business failing to or refusing ZWL or the local currency. I think business, just as with consumers or citizens, are rational. By being rational, I think money, Dr. Zwengo highlighted that money is more like it's demand driven. You need money for its purpose. When it fails to perform the expected functions of money, then why would one need money? So I'm responding to your first notion. Then going to the monetary policy statement, the 2024 monetary policy statement, I think we had a background where money supply growth was rampant and there was some issues to do with exchange rate management, inflation issues or management or instability. I think we've been operating under hyperinflation for some time. These are the key issues that determine business performance. So when we are now reflecting on the statement, on what the announcement from the new governor is the key highlights that have got the impact in terms of the business or the business environment, then he's pledging or he's promising to say, I think that one major reason that has been resulting or that has been aiding to the issue to do with the increased money supply, we all know is to do with the quasi-fiscal activities. So if he says he's not going to tolerate any quasi-fiscal activities, then it's a sound prediction, or it's a sound statement. We welcome the idea of pegging the ZIC to the interbank rate or the gold price, which makes sense, I think, from the calculation that Dr. Zwengo did. We saw that $1 US will be almost equivalent to around 14 point something, depending on the day rate or the happenings. Then if you go to maybe just do a comparison with our regional counterparts, talk of Botswana, I think they are operating at $1 US around 13, 14 Pula. South African rand is almost within the range. So if that happens, then it means the business will have a competitive edge in terms of the products and services that they will be offering. But the question now goes to the issues to do with it. Is that going to happen? Is that going to be attained in the reality? And what defines that is not about emotions, as Percy was alluding to, but issues of confidence and trust. They've got a history, or history becomes one of the key factors that determines the issues of trust and confidence, either from the consumer's perspective or from the business perspective. I think our current trajectory doesn't start in 2024 when we are talking of the ZIG. But we've got a history which dates back to around 1980 when we introduced the ZIG dollar. And when you go through that history, you see that I think we had stability from 1980 going to around 1994. Whatever happened in 1997, then we ended up having issues of the travelers checks, we had the issues of the agro checks until we reached the ZIG dollar that we are now actually getting rid of now. What has been happening within that time or period is what is determining the confidence that you're talking to, that the consumers and the business have on our own local currency. So, in a nutshell, Mr. Mnamat, I'm saying the business, when we listen to this statement, it's a sound statement because what it is proffering is good for business in terms of creating an environment. But the question that will always remain within the business, is that applicable? Is that attainable? What this statement is promising. But history now is against us as an economy. And I'm sure by history we know what happened in the past. And this is from the I would say, let's see what the roundtable. We've been doing what we call the business confidence index. We did this third quarter of 2023, we did this the first quarter of 2024. The business confidence, and one of the key indicators that we've been asking the business people or the CEOs and senior executives is to say, what would be the likely impact of the macroeconomic policies, specifically looking on the fiscal policy as well as the monetary policy on the business environment? Or how do you see the 2024 fiscal policy, the 2024 monetary policy impacting the business environment? And you give them a rate to say, okay, is it going to be positive? Is it going to be negative? Is it going to be the same? Or you are neutral with respect to the impact? But the honest truth is, in terms of the confidence that these CEOs or that the business have on these policies, it was actually negative, with about 76% of them saying that they foresee a negative impact coming from the fiscal policy, coming from the monetary policy. And you definitely are going to have another quick survey now that the monetary policy is now out, and try to see how it impacts in terms of the business environment going forward. But I think the questions or the reason that, or the notion behind such responses is based on the history and the experiences that these businesses have been facing in their business or in their operating environment. Well, these are key instruments, or these are key policies that have got a guide or that have got a huge impact in terms of how businesses are operating. And I think for now, I'll rest on that, Mr.
Thank you, Mr. Nyacheka. If Dr. Shamara is online, you could also come in to look at the perspective of the citizens. How are citizens affected by the monetary policy and the general sentiments that are coming from the citizens, and even perhaps those that are participating in this conversation. You can also keep sending your sentiments and what you think about the currency. If Doctor, you are online, you can also come through.
Thank you so much, moderator. I hope, esteemed colleagues, you can hear me clearly. I've been having a bit of challenges with my connectivity. Yeah, so maybe by way of introduction, I would start by saying the new monetary policy statement from the new governor of the central bank, Dr. Mshayavano, provides renewed hope and a bit of optimism that finally we can be able to break from some of the mistakes and the misdeeds and the errors of omission and commission of the past, and be able to chart maybe a new course, a new trajectory in as far as macroeconomic stabilization in Zimbabwe is concerned. I know from talking to a number of people and citizens, there's cautious optimism, which is understandable, given, I think, where we are coming from, given the experiences of the past, and the massive loss of value that occasioned by the chronic high inflationary trend. So I would say, obviously, the citizens, especially the ordinary, the marginalized and the vulnerable citizens, have borne a disproportionate brunt from the monetary and exchange rate shocks that have given rise to the chronic high inflationary development. So there's been a serious erosion of citizens' welfare and well-being. And like I said earlier on, the loss of value obviously is also adversely affected the ordinary citizens. So the inflation has been our biggest challenge for the greater part, I would say, of the last few decades. Of course, maybe with the exception of the period of the inclusive government era, where we were actually following the dollarization of the economy, we were actually able to ensure a bit of stability. And of course, there has been sporadic bouts along the way of chronic high inflation and even of hyperinflation, and obviously that erodes people's incomes. And when you look at of course, the key drivers of that have already been articulated by my esteemed panelists and the presenter, Dr. Zivengwa. The issues to do with the unsustainable growth in the money supply. Yeah, I think that's been a major challenge. When you look at the numbers, say over the past year, or between 2022 rather and 2023, I think the numbers are very, very unsustainable. And obviously that has given rise to inflationary pressures. And because of that chronic high inflationary trend, there has been a massive erosion of confidence in the local currency. Dr. Zivengwa has mentioned the basic functions of money. For the most basic function of money is to serve as a medium of exchange. And when there's chronic high inflation, means money can't effectively be a medium of exchange or even a store of value. So we've seen currency substitution, also known as dollarization, which has actually become more entrenched in our economy. I know conservative estimates put the percentage at almost 80%, not less than 80% in terms of US dollar transactions, and probably less than 20% in terms of our local currency transactions. So the issue of confidence and trust, I think it's a major issue. And as long as Zimbabwe continues to have the highest inflation rate in SADC and the second highest on the African continent, it means it will be difficult to sustainably and fully restore confidence in the local currency. But ultimately, citizens are economic agents, and when there's high inflation, when there's chronic high inflation, obviously they will refuse to accept or to transact in the local currency, and they would prefer to transact in a more stable currency. Then confidence again is also a function of the dialogue. I like the recommendation from Dr. Zivengwa, dialogue and transparency. I think it's very, very important. Dialogue, especially, because what dialogue does is that it number one, it unifies the nation around a common vision, and it also enables the economic agents and the citizens to reach a consensus on what must be done to address the macroeconomic ills afflicting the economy. And when that happens, it means there will be buy-in from the citizens. There will actually be buy-in from everyone. In fact, one of the major reasons why policy has tended to fail, one of the major reasons for the policy failure is the lack of effective consultations and dialogue. Of course, not just in Zimbabwe. The World Bank has done a paper, they did some analysis on policy failure in different countries. And one of the key reasons that emerged was the issue of dialogue, the issue of consultations. And in a number of countries, I'm a student of economies. I know a number of countries that have experienced challenges that we are currently experiencing, especially in Latin America. Ecuador is a very good example. I've done a bit of economic history. Ecuador, at one time, they also faced severe macroeconomic challenges typified by severe bouts of hyperinflation. And through dialogue, actually, they were able to extricate themselves out of that hyperinflation. So I think the issue of dialogue, the issue of transparency again, and I'm happy with what the central bank governor did in terms of opening up the vaults to the citizens. I think that definitely helps in terms of ensuring there's transparency. But of course, over and above that, there is need for periodic reports in terms of the status, periodic reports. And Dr. Zvengo has also mentioned even independent audits to verify our reserves. I think that will be critical. That will go a long way in terms of ensuring there's transparency and ultimately there's confidence. What I also get even from interactions with stakeholders, with citizens, and even with the working class, is there's also been a serious loss of confidence even in key state institutions, parastatals, and also even including the central bank itself. So I think that's an area that needs to be worked on, and through dialogue and transparency, I'm sure we can actually be able to bridge that huge deficit or that huge gap in terms of trust and confidence. Then another issue that has been raised, obviously, the issue of production is one of the critical success factors. Of course, I agree with that. But of course, for production to be sustained, whether in mining sector, to be able to boost our reserve, our gold reserves, or in any other sector of the economy, we need first to create a very stable macroeconomic environment, because no economy can prosper and grow sustainably without ensuring there is stability. And normally, stability is defined as low and stable inflation. A colleague of mine actually did a paper to determine the optimal inflation rate in a typical low income economy, and he came up with a figure of around 8% as being the optimal inflation rate. So I think that can actually guide us. Currently, we are at 55.3% annual inflation rate. So I think there's still a long way to go in terms of bringing that number down to at least 8%, or even any single digit number. I think is good in terms of inspiring confidence by citizens, confidence by economic agents, confidence by investors. So the issue of stabilization become critical. And I'm happy with the commitment by yesterday. I was at a breakfast meeting where I also shared the panel with the esteemed governor, and the PEMSEC of Finance was also there, and there is commitment by government that there are no more quasi-fiscal activities. Because when you challenge government about quasi-fiscal activities, they always give you a very good response that these are loans that were acquired by the central bank from multilateral institutions such as Afreximbank, and that actually benefited the private sector in terms of boosting local production. So that issue of quasi-fiscal activities, of course, the government has said that from now on they are not going to be doing that, and I think that definitely will help. And also the issue of the overdraft facility, of course, government has said that they haven't used that in a long time. So what that then points to in terms of the massive depreciation of the local currency that we've seen is the fact that people generally, or citizens, or economic agents generally, don't trust the local currency, which means that anytime there is an injection of liquidity, either through government payment of salaries to civil servants, or even payment of contractors, even if that payment is actually coming from government revenues, it means that will trigger automatically an increase in the demand for the USD as people seek, obviously, to preserve their value by substituting that local currency liquidity into USD. So I think it's fair to say that we are in a vicious cycle, and obviously breaking that vicious cycle of this increasing demand for the USD, I think it's going to take a bit of patience. It's a process, really, that's going to entail really walking the talk in terms of some of the commitments that the central bank has given, and also that the government has also given, because ultimately confidence is built over time. So building confidence is not an overnight event, but it's a process that takes a lot of commitment, a lot of discipline, both at monetary level and even at fiscal level, and even across even government ministries and departments, because there's also a lot of wastages, a lot of inefficiencies across government, and even within our parastatals. So I think those things really need to be tackled quite holistically, comprehensively, and ruthlessly, and that definitely then result in citizens and economic agents actually having more confidence in the local currency, in the local economy, and also confidence even in our institutions. Because there's been some measures that were announced that I think are beneficial to citizens. For example, the removal of bank charges on bank balances that are below $100 or its equivalent in ZiG. I think that's a good move. That's a good measure, which should also promote further strength and confidence, in formal financial sector institutions. We've also seen the recalibration of the interest rate regime. While that is positive, I think there is need to also then deal with the high inflation, because as long as inflation is higher than the interest rate, that actually means in real terms, the interest rates are actually negative. So that could actually promote rent-seeking behaviors, which could be detrimental to the economy. Then another key issue that must also be tackled is the issue of informality. The issue of informality, it's a major challenge. Of course, it presents both challenges and opportunities for our economy. But in terms of then the implementation of monetary policy, it presents significant challenges, because when there is high levels of informality, it makes the conduct of monetary policy, and not just monetary policy, macroeconomic policies in general, less effective. So we need definitely to, but of course you can't tackle that just from a monetary policy point of view alone. It also needs a holistic approach to look at the drivers of the high levels of informality, and then try to come up with measures, both from a monetary point of view, from a fiscal point of view, from an institutional point of view, from a bylaw point of view, to address high levels of informality, and ensure that at least we mainstream the informal economy into the mainstream economy. Then the central bank is also projecting year-end inflation of between 2% and 5%, which I think may not be achievable given the drought situation that we are currently in. So the drought is going to affect definitely food prices, and inflation obviously will also be affected. So 2 to 5% may be overly optimistic on the part of the central bank course, for the month of March, we have seen that there's been a bit of a slowdown. In fact, our monthly inflation rate has actually gone down, even though the annual inflation rate has increased slightly. But I'm not sure that we can achieve 2 to 5% annual inflation rate by year end. But I've also always argued that ultimately a currency crisis is ultimately a symptom of a structural crisis, and also it's a symptom of an institutional crisis. So what then means is that to then address a currency crisis, it requires obviously structural and institutional reforms that, in the case of Zimbabwe, address the huge competitiveness gap and also address issues of even corruption itself. That's an institutional issue. That's also a structural issue. Even the issue that I've mentioned about informality, that's also a structural issue that must be addressed to ensure there's sustained stability and sustainability in the macroeconomy. Of course, the governor also yesterday assuaged the fears of the market and the economy in terms of also the clarification of our de-dollarization roadmap. We know that we are in this multi-currency regime until 2030, but of course there's need for benchmarks along the way in terms of enhancing the usage of the local currency. I think definitely that will be critical. But ultimately, confidence in the local currency, my view is that we are able to sustain, if we could sustain, say, below 10% inflation rate for the next 6 months, definitely there will be a massive improvement in confidence and trust in the local currency. So I think the issue of stability, definitely, and we're hoping that now that we have this ZiG that is actually anchored on gold, largely gold and USD, that should actually help to ensure that there is discipline both at monetary level and also even at fiscal level, because obviously it then imposes a constraint on money creation, which is critical in terms of addressing the unsustainable growth in money supply. So by and large, I think we are at an inflection point, and I think the actions that we are going to take in terms of the implementation of the MPS will determine whether or not we will be able to stabilize our currency. But most people are optimistic, cautiously though, and I think we need to build on that cautious optimism and implement the monetary policy and other complementary fiscal and institutional reforms. I think that will help us in terms of sustainable stability within our economy. Thank you.
Summarize some of the issues that came from the people who are responding through the chat and also from our panelists. I think maybe before you go, what extent is the drought that we have going to affect the monetary policy? Businesses talked about quasi-fiscal activities. I think people fear that due to drought, the central bank will be forced to support the drought relief, and by so doing, we may end up having a challenge as well. And the issue of confidence, it keeps coming out. Perhaps you could share how the central bank is trying to build the confidence amongst the citizens. We have a situation where the actual coins are not yet in circulation, and I'm sure you appreciate the challenges that citizens currently have. To what extent is that going to affect the confidence that people have on the currency? And what are you doing to try and resolve that vacuum that has been created? There's also the issue of interest rates. The interest rates for the ZIG is 20%, which I think is cheap. If we are considering someone who would want to borrow, how are you going to deal with people who borrow for speculative purposes? Considering that as we borrow, we create more money. Do we have enough money to cover the money that is going to be created through the borrowing? I think those are some of the questions that you could relate to. You could also then even give us your parting shots since you have requested to go. For the other panelists, I think we have another round trying to dig deeper into the monetary policy.
Oh, okay, thank you very much. So you spoke about drought, which was declared a national disaster. But you also want to know that government is taking a stance to limit its involvement in grain procurement to the strategic reserve or what is required for social protection. The last I checked, I think social protection requires about 23,000 tons per month, which they calculate to a certain amount. And what the government has done is with the available reserves, they've added some reserves from which, so to make up for what is required to be taken care of by government. The rest, we are in a dollarized economy. We have now a functional economy. We import on our own. Is the private sector who is then going to be importing, helped by a more functional currency or market. And they've already started doing that. The import permits were opened, I think sometimes in August, in anticipation of drought. So they've already started, and they are very good at that. I can give you the names of these traders. It's very good at that. They've already stockpiled the maize, because maize prices last year were around 240 thereabouts. But now, do you know the maize price? South Africa is what is called surface. It has climbed up to more than $400.
Okay.
So yes, better. So if you're in business, that's what we expect it to be doing, projecting the future and taking decisions that makes you competitive. And they've done that. So we don't see that as a big threat. Yes. So the element of I think you spoke about the confidence. Right. You know, I like when we say there's cautious optimism, which tells you that the authorities have been given a chance by the market. Yes. ZIG has been given a chance by the market. And us as monetary policy authorities and the Reserve Bank governor and government, I don't think we would say there's room to waste this chance. It's a chance that we should guard jealously. And the only way you can waste this chance is to go against your commitment. The commitment is, don't be tempted to sell fuel exclusively sell fuel in ZIG and then print to meet the requirements of ZIG. It's a pressure that is coming from the market. But we say we stick to what is there. If you want to buy fuel in ZIG, use the available ZIG, which is banked. We should not succumb to that temptation from the market. So it's one of that's why you see even the response from the governor or Reserve Bank on frequently asked questions. This take to that. We respect the multiple currency system. Yes, despite all odds, you just need to stick to what is there. So if we see this thing succeed, over time. So a properly crafted policy will be able to achieve confidence because it is able to align everything in the economy. Our business as monetary authorities is not to look at everything in the economy. No, is to at a high level craft a proper policy. Monetary policy is there to show the door. Not to be looking at everything. So which is what you spend your time with, and recalibrating the economy, including the interest rates. It has been recalibrated in line with the recalibration of the exchange rate. Or it is not thumbsucked. Okay. Yes. So we are still so the interest rate, the trust remains positive, the real interest rate.
Okay.
And we've achieved that.
Okay.
Through the scaling down, the recalibration of macroeconomic variables, specifically interest rates. Then your other question was to do with
What's it to do with confidence? Yes, like what
I spoke about confidence.
Yes.
Yes, I spoke about confidence.
Yes.
That confidence, right? Success breeds confidence. Yes.
So you are going to take advantage of the cautious positiveness.
Yes, we'll ride on that.
Okay. I would want to open the discussion to the participants who are online, so that they also come in with their questions. If you really have to go, PSC, you are free to go. Unfortunately, PSC is going, but we have a panel of experts who can continue to answer most of our questions. We also would want to engage the RRB, such as the church.
Yes.
To also pray with the new governor, and also to share our experiences. Yeah, we are a Christian nation and we believe in God.
Yes.
So I'm sure through you will be able to meet with the governor as the church. Thank you so much for being the panel, and you are excused. Thank you for your invaluable insights. Thank you. Thank you. Maybe as we open the discussion to the people, we want to go now to look at what do we need to do as non-state actors, as the academic, as the civil society, as the church. What is our intervention based on the monetary policy and all the policies that are coming out from government? Do we give them a chance, and how do we ensure that these policies achieve what they are supposed to achieve? We are supposed to contribute to the national development of the country, and our contribution and the work that we do will be very important in ensuring the success of the nation. So I'm going back to you, Nyacheka. What are you doing as a business to ensure that we succeed as a nation? I know it's a difficult question for you, but I think as business, we also really need to contribute to the development of the nation and to the success of our monetary policy statement. I think to an extent, the governor, the RRB said, at least on paper, they've tried to give us something that we can work with. How do we make sure that it's a success, and how do we support it so that it succeeds?
All right, thank you, Mr. Namat. Yes, you highlighted tricky question, but I think to answer it in a general sense or in a general mode is to say, when you look on the government in the central bank, just like you highlighted, that the governor announced the monetary policy statement, which stipulates the rules and which stipulates in terms of or which set the tone in terms of the conditions and the environment that the business is going to operate in. So it's upon the business to operate within that environment and try to develop some strategies which encourages or enhances resilience against some of the challenges or some of the loopholes that will emanate from the monetary policy statement. I would give, for instance, to say there are a lot of issues that can relate to the recent monetary policy statement, or that can maybe relate to other macroeconomic policies that will be provided by the government. Where we are saying one question that you asked it maybe to place it before it went was to say, in terms of confidence, in as much as they are going to ride on the cautious optimism that is coming from the market, but it's also upon the policymakers or the government to ensure that these policy-making processes are inclusive. By inclusive, if you want to build confidence in the consumers, if you want to build confidence in the business sectors, then you have to involve them in each and every stage, not only to say when you are on the implementation stage, then that's when you have to call, then that's when you have to call for the involvement of the business or the involvement of the general citizens. But having them from the start, consulting them. And I think this structured currency or this new SIG that have been now put into place through the monetary policy statement is not something that had just come yesterday. Because I think His Excellency, at one point in time, addressing the Parliament, also gave a policy direction to say this is where we're going. We talked about the structured currency, and I think it was a time frame where people were asking, what's this structured currency? Then it means the monetary policy of the policymakers should have rided on that policy direction to then engage the citizens as well as the business or all key stakeholders in terms of involving them, in terms of coming up with the monetary policy. That alone could definitely build confidence. Then the business, as I've highlighted, is that the role of the business is to ensure that the products and the services are there to the consumers or to the nation as expected. And the role of the business is then to say they will try to come up with some strategies or some counter strategies that will help us maybe in terms of hedging against the likely effects or the likely challenges that we are going to face because of the loopholes or the weaknesses that might be attached to any specific macroeconomic policy. And speaking of which, just for instance, we're talking of this monetary policy, and I think Dr. Zilingwa highlighted that we are operating in an environment where we are talking of almost 85% of the transactions being in foreign currency or USD transactions. That also reflects, Mr. Mnamati, when it comes also to the issues to do with the cost base of production of businesses. As long as we have that structure, then it also implies the same to the cost base of businesses. Then businesses are trying by all means, because that will definitely have an impact in terms of their competitiveness going to the global markets or to the regional markets with the products and services that we offer as a country. So we are trying by all means to ensure that we minimize those costs and try to ensure that we provide the products and services as business, but within the operating environment or outside the confines of the operating environment that is being provided by our macroeconomic policies that we have as a nation. So it's all about trying to perform our role, building resilience as businesses, but that will ensure that we deliver products and we deliver services as expected, but within the confinements of what the policies are offering or what the policies are presenting to the business environment.
Okay, thank you, Mr. Nyacheka. You are here for business and for profit. So I also understand you. I would want to come to you, Dr. Zwiwa, as we open the discussion to our participants. So those who are online, if you want to speak, kindly raise your hand. Our technical team will recognize you and they will make you speaker. From there, you are then going to be able to speak. But Dr. Zwiwa, following the discussion, I saw someone who typed in there to say, Dr. Zwiwa, are you recommending this function policy for Zimbabwe? Do you think there is hope for this monetary policy from your academic perspective, from what you studied and what you understand about policies? Is there hope for this monetary policy?
Okay, thank you very much, Mr. Namati. Also, thank you, the presenter or the one who commented on that, or the one who asked it the question. It's a very pertinent question, given where we are as a nation. For myself, I'm an academic, I'm a researcher. When we do research, we normally look at evidence-based research, so that we offer some possible solutions to the direction that the economy should take. So just to respond to that question in short, I can say when the role of this policy was announced by the governor, we were all anticipating the policy. And at this stage, we can't stop the policy. And I also highlighted that the announcement of the policy was done according to the law. We were going to be very much worried if the policy was not announced. That's why you saw a public outcry when the police actually came late or delayed. So just to answer you in short, yes, I would recommend that the policy gets implemented. In fact, it has already been announced according to the law, and it's a requirement that the central bank puts a monetary policy in place. But our role now as associations is to try and highlight or try to educate people on the issues that they need to understand about the policy. For example, just starting by just understanding the policy itself. What does the policy say? What are the success factors? What are the possible risks associated with the policy? So we try to flag that so that we can inform the government on the way forward. Like I said earlier on, the governor cannot do this alone. He needs our support. So it is quite unheard of for citizens to refuse their own currency, because there are a lot of benefits associated with that. Of course, I agree that we still have the hysteresis from the past, or the appetite to have that we got from using the US dollar, which we cannot win off ourselves easily. But going forward, I think the direction that we are taking is okay. I'm also quite happy that the governor is not bulldozing this policy on us. The issue of the multi-currency system is going to remain in place since 2030, which is a welcome development. So we need to gradually move towards de-dollarization. What I was not going to be happy about was a situation where the government works, or the governor wakes up one day and say that the US dollar cannot function anymore in this economy. That would be too much policing on the part of the economy, and it's going to reach some undesired consequences. So, but the fact that he is allowing the use of the multi-currency. So we are still going to be in the same situation we were before, but at the same time, navigating through the use of our own local currency and also trying to build confidence as we move. So I think also by the time we reach, say, 2030, we will also have, by that time, have been conscientized and believe our own currency. So that's my response to that. Sorry, it then turned out to be long. I that it was going to be short, but I was trying to elaborate on some of the issues. So, coming from the academic side, like I said, our role is to do research, and you do evidence-based research. We also focus on the solutions-focused research, because we are now moving toward, we adopted the Education 5.0 model, where we are mostly interested in the production of goods and services. So providing evidence-based research is one of the key priorities of university research. So
thank you, Joe.
that's what I can say for now.
Yeah, we'll be waiting for the research. I see Rev Boards, you have raised your hand. When unmuted, you can go ahead and speak. But maybe before you come in, Dr. Chambara, there is a question from Winnet where she's asking to say, what are the gender implications of the policy? How does this policy affect men and women differently? So we also invite you to respond to that, and also some of the discussions that are coming. Rev Boards, you can come through.
Thank you so much, and thank you so much to Dr. Z. He has unpacked the policy so well, and I would possibly love to bring him back to the 8 recommendations that he made, and on the parting shots that were made by Percy as we reflected on the drought and the appetite of spending as far as our country is concerned. We have got so much appetite to the extent that the 2.5 billion he is talking about that is being held by banks, without knowing it, it would actually have been exhausted, because the balance, we are talking about 1.7 being the amount that has been the import cover that Dr. Z has actually uncovered. And he comes on the platform and says, we've got a liquidity of about 2.5 held by banks. And if you are going to look at this, how are these banks going to transact or support the economy itself, industrialization itself, or production itself, so that by the end of the day, we've got this monetary policy making a meaning? Because from the look of things, we are saying this is money that is being held by banks. And from the look of things, the way we have been operating as a country, we have been operating from the perspective where the RTGS, where the bank settlement, the RBZ itself has not been settling all the bank transactions. Banks have been settling their own transactions on their own. And what is the implication of this monetary policy to that particular system that was in operation? And we are saying, as much as we are doing this, do we really need ZIG if we have got so much money in liquid? If deposits are about 80%, do we really need ZIG? Did we need a new currency if we've got 80% in deposits that are actually in which we are transacting in the foreign currency, or which are in USD? Did we need ZIG? So I'm seeing some inconsistencies in this policy, where we are saying we have got so much that we are having, and this so much that we are having deposits at this level. I'm seeing this as a way of trying to get depositors money, so that by the end of the day, depositors will not be able to access their money. And then before we know it, ZIG will be poured in abundance in the market. and people will not be having access to their own money that they've actually deposited in their own accounts. This has happened, and this is the confidence that we have always been complaining about, because they are saying banks are having 2.5 billion. Whose money is that? It's depositors' money. So is that government's money? It's not. And in its own reserves, in import cover, it has got 1.7, and it has got only barrier of about 2.5 tons. And if it is true, this is only 2.5 tons of gold. So can we really, is it sustainable as far as also environment management is concerned, where our own currency is now being bagged on natural resources? At one stage, these natural resources have not been also produced or have not been processed, and this is natural. And what is going to be that on our own footprint as far as resource extraction is concerned? And the loan constructions, how much debt are we having as a country today that we are going to have a debt assumption bill that is going to be discussed in Parliament? And from the last discussion that we had with the ZimCode, we're sitting at plus 17 billion external debt without domestic debt having been discussed. And how are we going to settle this debt? It is also going to trickle down to the common person, who is myself, paying tax, so that the government is able to settle the debt. And the governor is not coming out clear how debt is going to be settled. It is going to be settled by becoming an assumed debt by the government, so that it becomes also the burden of the common person. So I'm seeing a lot of inconsistencies. As much as we would want to have our own currency, but this currency is not going to be a panacea to the problems that we are having. Inflation will definitely go high because people have got no confidence in our own money. By today, it's 5 days they spoke about that ZiG. It is not yet in circulation. So where is it? There's already pandemonium on the market. People are already holding on, and prices have already gone high because there is no communication, there is no truth to the cause. Thank you so much. This is really an emotional issue, and the 8 recommendations made by Dr. Z actually outlaws that monetary policy. The 8 recommendations are actually saying, no, this monetary policy is ill-conceived. So let's go back to the drawing board. And this brings us to the issue of participation by the people. People are not being consulted adequately in this country. We are just finding. But the Constitution gives us the right to participate, and we are not being consulted. At what level are we participating? We are now participating after the monetary policy has been issued, meaning to say the level that we are participating is we're at a level of tokenism, where we're just being told, receive this, just to appreciate and append this, make this to happen. So that by this today, we are saying, okay, if Dr. Z has said this and that, and he has made 8 recommendations, it means that to say that our fundis have actually informed us. By the end of the day, let's accept it. But we could have denied this policy before it had actually been conceptualized. You see, so thank you so much for this platform. People are being informed, people are participating, but at a wrong time at the stages of participation, as Hunt would want us to participate. Thank you.
Thank you, Rev. I think you spoke so passionately about participation, and I think it's something that we are going to go into the governor to say we also want to participate. I see Mkotami Maxwell. Maybe if we have 3 people coming through, and then after that, we also give time to any of our panelists who want to respond to your contributions. I kindly ask you to be very short and to be very precise. I know it's a very emotional issue, but also let's consider the time. Or we have a few minutes left before we finish this discussion. Mkotami Maxwell, once you are unmuted, you can go ahead to speak.
Thank you. Can you hear me?
We can hear you, Maxwell.
Okay. Thank you very much. I want to be very brief. We are talking here of money issues, and we are not an island. We are participating in the broad world economy. We have, due to these policies, we have been put under financial isolation. What am I talking about? Take your bank card. It's written Visa on it. Try to swipe it when you're outside the country. It doesn't work. What is this new policy saying about that? How is ZIG going to liberate us in terms of participation in the world economy, in terms of financial freedom of the people? I'm looking at our bank balances and all that. I'm sure you know what I'm talking about, using our electronic cards internationally. Then the other idea that I want to bring back to everyone, in this meeting is that of, you remember what Gideon Gono used to talk about? He emphasized what he called third-party endorsement of any currency for it to be meaningful. What is the world saying about our measures? Thank you very much.
So unfortunately, Percy is no longer around, but I'm sure the colleagues that I have here will also do justice to that question. Prosper Tambara, if you are in, you can respond to the question on the gender implication of the policy, and you could also even respond to the issues that have been raised. Over to
unfortunately,
you,
I was in another meeting, but I didn't hear the other questions. But for the gender implications, I think this is just a policy that has been announced. So I think we need a bit of time to really understand how that's going to affect both men and women differently. But I was just having a look at some critical indicators, say, of financial inclusion. When you look at, say, for example, average loans to women as a percentage of total bank loans, I think the ratios are still very, very minuscule. They're very, very, very low. For last year, it was just 7.6%. Of course, that's an improvement from 4.48% in 2022. So I think that shows that I think there's still a long way to go in as far as ensuring there is financial inclusion within our economy. Even when you look at the nominal value of loans are given to women, again, the numbers are in real terms, numbers are very, very, very low. So obviously that then also affects the capacity of women entrepreneurs. And in any case, most of the women and even the youth are actually subsisting in the informal economy. So maybe I'll just give that as a brief answer, but I'm sure in the next 12 months, we'll have a clearer picture in terms of the impact that the monetary policy is actually having in terms of these basic indicators, such as financial inclusion indicators, the number of loans that are being received by women and even by the youth. So maybe that's my just brief response to that one. I didn't get the other questions. I had another engagement.
The recommendations by Dr. Zwenga. He says they are very useful, and he hopes that the Monetary Policy Committee will consider them next time so that the nation will not panic. Thank you for that. Perhaps we could also go with the recommendations to the Monetary Policy Committee. Yes, one of our facilitators also is a comment. Chico, you can come through.
Thank you, Mr. Mnamat. I want to raise maybe a question or just a contribution to our Dr. Zwenga and our panelists, considering the fact that if you look, let's take for instance in 2019,
when we started to reintroduce our local currency, starting with the RTGS dollar. We witnessed that 2019-2020, the rate of depreciation of that RTGS dollar, which then moves to fully fledged currency in June 2014, after that SI 142 of June 2019. We witnessed a massive depreciation of the local currency. And if you look on the operating environment, the context, you can see that the context was characterized by a drought. We have El Nino-induced drought in 2019, issues of foreign currency shortages in the formal sector, issues around electricity deficit, issues around even the price energy costs in this economy. And all this contributed to man printing official statistics from Central Bank for 2019-2020 actually show massive growth in man supply. Could it be reserve money as well as the broad money? And then I'm now looking into our situation in 2024. I'm seeing that we are introducing a currency. Yes, it's being backed by gold, which is relatively stable because of its a long history of use as a store value. And we are also backing it with the foreign currency, and as Dr. Slembo has indicated, the statistics. But also look on the context, we are experiencing the same conditions as in 2019. Look on the El Nino issues. We are witnessing drought. Look on the energy crisis. Look on even our debt crisis. The impact of actually transferring RBZ liabilities from the central bank to the treasury is going to put pressure on the fiscals to actually service those external debts, and these external debts are in foreign currency. And that exchange rate risk which can face as a nation. So how, my question now is, given this situation of 2019, now 2024, that is almost the same, how best can the central bank or government in general actually try to address or minimize money liquidity creation due to the pressures which are arising from our debt issue, our debt crisis, our energy crisis, etc. So how in your views, you the Dr. Slembo and maybe the panelists, if you can get time, maybe I can say, how can you advise Dr. Shaban to actually make sure that we contain? Yes, there will be pressure. No, to avert a humanitarian crisis, we need to import food for the vulnerable communities. But where will the money coming from? So how best can, and also look on our ongoing infrastructure. The roads, they will demand all those contractors, they will need to be paid. And we are funding infrastructure, which is long-term, using short-term means. And this is putting enormous pressure on the fiscus, which will actually, to maintain fiscal discipline, monetary discipline, you need fiscal discipline. It's a prerequisite. So how best can the governor or the central bank, as well as this pressure itself, mitigate around the issue of money printing pressure as we move forward? Thank you.
Okay, thank you. Thank you for that. I see a lot of questions. People raising their hands, so you can take note of this person. I really would want our participants also to speak so that when you respond more holistically. So I recognize Winnet Banda. Once you are unmuted, you can speak. After that, Chef Flint, you can also come through, and then Dio, sorry, you can come through after. Over 2 minutes.
Okay, thank you so much, Mr. Munamaj, for the opportunity. Let me just take this opportunity to thank Dr. Zivengwa for unpacking the monetary policy statement. I think it was clear, we understood the background behind, and also I want to thank him for the recommendations that he has submitted. I think the recommendations there are quite clear. My worry now is like in future programs like this, we are seeing the panel there is full of men. We also want to hear the voices of women. I don't know if there are no, if we don't have female economists who are able also to unpack some of these issues. So I'm just recommending that in future programs, may you also consider to bring also women economists on this panel so that we could also hear the voices of women coming out, because most times some of these issues that we are discussing here, they affect women to a greater extent. So I think it's a noble idea to also include women in some of these discussions, especially when it comes to unpacking these issues. Thank you. That was my submission that I had. Thank you.
Noted, Winnet, thank you for that. Reverend Flint, you can come through.
Thank you so much, Mr. Namati. I really appreciate this opportunity. Let me appreciate our presenters for presenting what to us. My question and my worry is, I'm hearing that the ZIG is backed by our God, which is in the Reserve Bank. But from the history of our country, we hear many stories of missing precious minerals, precious money. And if this ZIG is backed by such God, what about one day if you wake up and hear that the gold which was reserved backing this ZIG is now missing, and the money which was announced by one of our presenters that the total value which is needed is 90 million to back up this ZIG currency and is now missing? What will be the value of that money, and what is going to happen to this currency if you get such news that our precious mineral is missing? Thank you.
Thank you. I think it's a valid contribution. What will happen? You are holding a lot of ZIG, but the gold that is making it has been stolen. I think that's it. That's an interesting question. Over to you, Tio.
Thank you very much for your presentations. It were quite instructive. So I have a question. So this new currency aims to reduce inflation and stabilize the currency. So my question is also that with this new policy, they want also to enhance the access to credits. So I was thinking this will also lead to inflation. So I don't really understand how this new currency will reduce inflation if we want also to improve the access to credit, which will lead to investments and incorporate more money into the economy. So this is my question. By enhancing the access to credit, this will also lead to inflation, yes or no? And if this is yes, what are the measures the policymakers think that they can put in place in order to avoid that? Thank you very much.
Thank you, Joe, for that question. So what we are going to do now, we are going to have a round where our panelists respond to the questions that have been raised and also give their parting shots. I also wish our panelists would actually help us with some of the things that we can do from now. I realize issues of dialogue, they've come through. We need to dialogue with the authorities. We need to engage them and ask for participation. The recommendations from Dr. Zivengwa have been welcomed, and I think it's time we also put them to the necessary authorities. Those are some of the next steps that we have seen. So to our panelists, you could respond to some of the issues that have been raised, but also you can then also go ahead to give your parting shots. Our technical team, can you just scroll so that we see if there are any questions that have not been addressed or any contributions that we may need to know? I think something came out. Yeah, that one. We have 5 kg gold agriculture trophy, which was stolen from the museum in Bulawayo around 1999 until now, no trace. Okay. I think it's speaking to the situation where we end up having our gold stolen. So I think our panelists, you can respond to that. I will start with Doc, if you are ready. I know most of the questions were directed to you. After that, Nyacheka, you can come through. Dr. Chitambara, you give us also your thoughts around the dialogue.
Okay, thank you very much. Let me start by responding to the issue of debt that was raised by Shukombore. Yeah, that's a big element in the issue of debt for this economy. So by transferring debt from the central bank to the government, and the way the government is not able to pay for the debt, it means we are simply compounding the existing debt. We are increasing the internal debt, which is going to add on to the total debt. So I think there is need for coordination between the governor himself and the Minister of Finance on how they are going to deal with the debt issue, because it's going to continue to be a burden on our shoulders as we go forward. Because what we have been witnessing over the years has been the issue of debt rolling, transferring debt from one generation to the other, or from 1 year to the other. And the interest on debt, I'm sure from Zimbabwe you can agree with me that the interest itself is now larger than the principal amount that we borrowed. So I think there is need for more clarity on the issue of debt. To say when the governor is transferring the debt to the treasurer, what is he doing? In my own understanding, when you transfer debt to the treasurer, it means you transfer the debt to every one of us as an economy, to every part of the economy. And how are we going to pay for that debt? It means we are going to pay the debt either through increasing taxes or through printing money. But now the danger now is the new governor is saying he's not going to print money. But if you are not going to print money or create money, money does not only mean printing using the machine, but you can create money through the open market, through the various operations like the open market operation, issuing debt. So once you start to issue debt, it means you are creating new debt. I can assure you by the end of the term of the governor, you would have created some debt that will again grapple with as to how we are going to service that debt. The principal function of the central bank is that it has to issue currency. It has to control money supply. And how do they control money supply? They can do so using the exchange rate, so the interest rates. And once you introduce the interest rate into the equation, it means you are also coming up with the issue of borrowing or lending to the market. And that in itself creates money supply or creates the debt that we are saying we are not going to create. But the idea here is there is some limit within which the central bank can create money. So if the governor is going to say he's going to create money within the limit that is explained or that is presented by the Reserve Bank Act, then I think inflation is not going to skyrocket as it has been doing before. So I think one of the principal functions of your own local currency is to be able to have some control on your own money supply. So if the central bank governor is aware of that, then it's most likely that he is going to create some amount of debt. But the debt that is going to be created has to be sustainable to some extent. But the already debt that has been created, which we are going to assume as a government, that has to be serviced through the normal channel of servicing debt. Now with a compounded debt position of around 20 billion, the total debt. So it's going to compound the existing debt. So that's my take on the issue of debt. Then someone asked it about why do we have to introduce a new currency when the economy is dollarized, they say to the tune of 80%. The motive of having a new currency is to have your own local currency. Remember, this is a local currency. If I may speak in another language, if we are moving from the movement from ZWL to C, in my understanding of economics, you see the rate now is $1 to 15 cents, and it used to be $1 to over 30,000. To me, it's just a currency devaluation. So it's akin to that. It's very close to that. Only that is the jargon and the terminology that has been used. But what we have simply done as an economy is to simply revalue our currency, increase the value of our currency. That's what we have done in simple terms. Whether we call it ZWL or any other name, is neither here or there. It's just a currency revaluation. So the principal reason for having your own currency is to have some maneuver around the issue of monetary policy control. That's the main principal reason of having your own currency, because we have no control over all the other currencies which are in the basket. So once we have our own currency in the basket that we are talking about, then we can have at least some room to control the economy using that particular currency. So that's the motivation. And also, it's also prudent also to have your own currency, provided it satisfies the principal functions of money that we talked about. No one can run away from the own currency as long as it can perform its basic functions. For example, the South African rand just close by. It's serving its purpose. And no one is even worried about changing the rand to whatever currency. So if we are all clear on that route where we want to take, then I think we should be moving in the right direction. But what I'm worried about is the commandeering type of economics that our policymakers usually resort to. So the issue of consultations becomes critical when you deal with issues to do with what? With the monetary policy or any other policy that we want to come up with. So I think there is need for the policymakers to give people room to also deliberate on these issues and provide some advice. Because at the end of the day, the common person in the street is the one who is affected by the decisions that they make. So consultation would actually make a policy much more credible. Then I also see something on the missing money, precious minerals. It's quite true to some extent. I'm sure you have heard a lot about the missing money. Some are hearsay, some are evidence-based. I'm sure we've talked about the 15 billion missing gold and so on. So these are the issues, that